5-minute December market update. What's happening with mortgage rates? Here's what's happening. You know how you tick, 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 tick up on a roller coaster and then you have a crash? But have you ever been on that roller coaster where you go all the way up and then you expect the crash and you have this little dip? That's what's happening with mortgage rates. They've been going up, going up, going up. In December, we got to the top and we kind of leveled out. We're going to be going around a long ride before the big crash of mortgage rates go flying back down. That little ride around getting ready for the downhill, I think it's going to be 12 to 18 months. I think we're going to be at mortgage rates as we have now for in the 12 to 18 month range. A return to normal spread. What this is saying is that if we can get back to a normal spread, basically what needs to happen for the rates to come down a little bit now is for banks to believe and realize that we're going to be at this rate for long enough that they don't have to have this fear of immediate refinances. So now that we know that this is going to be a longer ride around before we go down on the interest rates, this will give them the ability, instead of having a spread. Right now we're at about almost 3% above the 10-year yield. We'll get back to this normal rate, and I think we're going to settle in here for a good while, 12 to 18 months. We're not down to here yet, but we'll get back to this normal spread, and we'll settle there for the next 12 to 18 months. The housing market is expected to face uncertainty heading into 2023 as consumers, financial markets, and policymakers work through their respective challenges in today's economy. Because we see a slowdown and we see the inflation comparisons starting to become more and more favorable, you'll start to see that inflation number move lower, lower, and lower. And as a result, mortgage rates should move similarly downward and getting us in that getting those numbers in the fives again sometime during next year. And then I think they're going to be there again, 12 to 18 months. We're going to have some time. Don't trust the headlines without proper context. Headlines are scare tactics, okay? So things like this is just fear-mongering. In reality, the drop-off from 2022 to 2023 in the housing market was only about 15%. So 85% of that great year we still had in 2022. And we're going to have 80% of that great 2021. We're going to have an 80% of that great year again in 2023. Credit card balances are still not high, not scary high, okay? They're like they were in 2019. They're not like they were, they're not in this horrible, scary time. Okay, right now, 3.9% is the total quarterly disposable personal income. In other words, people are keeping their debt service ratio in check. We're not in a scary moment here. Back in 2007, what happened was people were spending all of their disposable income and they were borrowing a lot more disposable income. They didn't have anything left to come through this recession, okay? For the second quarter in a row, the mortgage delinquency rate fell to its lowest levels since the survey began in 1979, okay? So what that means is people aren't behind on their mortgages, so we're not getting ready to have a panic button. What we did have in 2009, we had all of these crazy amounts of foreclosures. They've gone up since 2021, but up is still the second lowest year in the last, what is that, 20 years? So we're not at a panic stage. I don't see this coming back. 2023 housing market forecast, I got 1 minute to give you an idea. If you're a home buyer looking to buy a home, back in June, we needed this crazy rate of inflation in the housing market to stop. Well, it has slowed down. So what he hoped would happen back in June, it has happened. And it's happened because of the mortgage rates. Projections for next year, look at that. Kind of similar to what we have today. However, I think that if the people who set these rates begin to realize that we're going to be here for 12 to 18 months, they'll be less afraid of rapid refinances, And this will even go down a little bit more in 2023. I'm hoping we get into the 5s in 2023. Mortgage rates could pull back meaningfully next year if inflation pressure eases. I think it's beginning to ease. Here's our projection. So to be clear, 5.8 million. It's better than a lot of these past years, 2007 through 2012. Next year's forecast is another over 5 million sell year. The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have began coming down since November. All right, home price forecasts, there's a big range. Some people are saying 5.5% up. Some are saying 5.5% down. Realtor.com's probably wrong. Zellman's probably wrong. We're in here's where we're really looking at. Likely, we're going to have a small rate of appreciation. However, I would love for you to do the math with renters who are trying to decide, should I stop renting and buy, and let them see if they bought and lost 5%, they would probably lose less than they're throwing away on rent. The housing market, once adjusted to the new normal of higher interest rates, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. We still have more buyers than we have sellers, so we're still in a good place. From our perspective, the good news is that demographics remain favorable for housing, so the sector appears well positioned to help lead the economy out of what we expect to be a brief recession. There's the quick market report.